Hey everyone, it's Evan here from the Trade Risk on Wednesday, July 19th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now, I hope you're doing well out there on this Wednesday afternoon, evening, nighttime, morning, whenever you're watching this recording. Let's get into the charts here. Bulls getting it done on Wednesday, up 53 basis points here on the day to new all-time closing highs in the S&P 500. You can see we've just continued to extend this run higher. Let's look at the weekly chart before we get into that daily. You can see here, very clean, orderly breakout here to new highs. We resolved last week this 6-week sideways range to the upside, had new weekly closing highs, and so far this week we are continuing on that path to new highs. Bulls very much in charge, in control there. Let's look actually at the cash market again. We'll stick to that theme for now. We can see again 24.72, nice all-time closing high. We came into the week with a little bit of a stutter step. We had this quiet inside Monday day. Tuesday we had a little bit of a pullback here, just to 24.50, which is laughable that that would be called a pullback, but we came back down, kind of tested a few points lower. Bulls drove us higher, and then of course we had the gap higher today to close at all-time highs. Now, what are the things to note about this chart? Well, first, take a look at those moving averages. You can see the 8-period EMA extending away from the 20-period. So we're actually building momentum here. Bulls are increasing that momentum, building steam on the upside. That's constructive. Volume has all come in sort of below average here, but doesn't seem too unusual. It very much, I think, coincides with seasonality at this time, so I don't think there's too much to draw from that. The concerns here, there's 2 points that I would make. Is one, just be aware of sort of where we've come from. We've had now basically 5-6 days of strong movement to the upside ever since breaking this trend line back early last week or mid last week. So we have moved pretty far in pretty short order. The other thing, which we don't talk about often, I certainly don't talk about, but I certainly pay attention to it, is the volatility, the VIX index here. And you can see here we are trading and closing below this $10 handle, this 10 handle, very comfortably at this point. Historically, throughout this year, we've kind of, tested below 10 and then saw kind of knee-jerk reactions higher. This time, we really seem to be comfortably trading below 10, and even the VIX, which is actually the volatility of volatility, the measure of volatility, this is at some pretty low year-to-date levels and historic levels. When you take into account both the VIX and the VVIX here. So I'm not going to say that we have to, mean revert higher here, not because we have clearly seen, if anything, that 2017 can prove to keep a subdued volatility level longer than usual, but it's something to be aware of. It helps give us some context, just basically saying, okay, market seeing, basically an extreme compression there in volatility. We've gone 6, 7, 8 days up in a row in some of these markets. Let's just be aware of where we are. For my style of swing trading, I'm always taking profits into moves like this. So as the market continues to extend itself in these runaway directions, I'm generally harvesting profits, trying to keep runners on and small position sizes on to continue to capture a trend, but also just reducing risk in that trend. So that's something to keep in mind. Just be aware of where we are. If you're coming in new, trying to buy up a bunch of new long exposure today, might not be the best place. But again, if you take a step back, structurally, bulls certainly in control, have some momentum, have some breadth. We'll talk more about those sectors later. So that's the SPY. IWM, this is the impressive chart here. This is what I like. This is what I put a position on in today, is the IWM. Take a look at this weekly chart. We've been noting this very tight sideways orderly consolidation for the past 6 weeks, and it is finally resolving to the upside. Got new all-time closing highs here on the daily chart and new all-time intraday highs for the IWM in general, and you can see it just very cleanly taking out these highs here from the past 6 weeks. So if we look at that daily chart, you can see we're moving higher. This upper end of this channel here could be pesky, could limit price, or we could start to explode through it in some type of runaway fashion. We'll have to see how really that shakes out into the end of the week, but we put on a position here in the IWM. We're looking to see if this can continue. We do think the market, as I say, is stretched in some areas, but we do want to still participate and hopefully stick with a more resilient, more pent up and not so extended market like the Russell 2000. We'll see how that acts for us, but for now, we are long the IWM. The NASDAQ 100 continues to impress me here with this strength, this runaway, complete V-shaped rally higher here ever since basically this day here, back on the 7th or 10th on Monday. This has gone up now 9 days in a row to new all-time closing highs. So we're up 9 days in a row, made new all-time closing highs, took out this prior, this prior all-time high from beginning of June. Very, very impressive. Again, you can see the 8 and 20 period, lots of momentum behind this move. 9 days up in a row, right at a prior all-time high. Is this a spot to be loading up the boat? Again, this is just where you got to ask yourself, where have we come from? What's the context around this current price level? So I'll let you think about that based on your strategy time frame and so on and so forth. So that's the market environment. Bulls, hands down, in control. When we objectively look at trend, momentum, and breadth, can we pull back? Are we stretched a little bit? Absolutely. We can see some short-term volatility, always can. But from that bigger term structural perspective, things look pretty good. So let's get into some other markets now. We'll go to TLT next. You could see having some continuation higher this week, up 1.19%. Remember last week we finally put a little bit of a stance in there. We saw 2 weeks sharply down in TLT. Last week we saw basically just kind of move sideways, halt that downward progress, and now we're seeing a little bit of up movement here. Could this turn into a bear flag? Sure it could, but let's see what happens. We're rallying into some declining moving averages, so still a do not touch market for me, waiting to see how this all shakes out in TLT going forward. Gold, kind of the same thing, although getting a little more power behind it, but rallying into some declining moving averages. Remember, we did see a pretty good move lower throughout the month of June. We're seeing rebounds now in gold. Same thing in silver. So we're waiting to kind of let this market catch up. Are we going to move back down, retest these lows, probably put, maybe put in some divergences on either MACD or momentum or something like that. Maybe we get a double bottom tradable low. Again, all hypothetical, just thinking out loud, thinking ahead of a possible scenario, or we continue to just kind of levitate higher here. That's a possibility as well. V-shaped rally and catch more people off guard. So for me, the metals really just watching, just a spectator, not really getting involved in either of them right now. Oil, I think, is a little more interesting, maybe a little more actionable. You can see we are now taking out this prior pivot high here, this 962 level. We closed above it today, 1.5% to the upside. 8 and 20 period now have curled up, so we got bullishly aligned short-term moving averages. I like that. You got a potential higher low. We're in the process of making a higher high, so certainly some transition going on here in oil, something to pay attention to. Zooming out, this bigger term structural trend is still lower, but for now we have some constructive action there in the short term, so something for you active traders to potentially catch, to take advantage of and participate in. Natural gas, not quite taking out these prior highs, but holding kind of pent up. It was flat on the day today, but you can see this holding above the 650 level, which were the lows from March, and you can see we're just kind of hanging out near these June highs here, right under $7. So something to pay attention to. Could be a nice actionable breakout there in the near term to potentially look at. And I think that is everything. Let's get into some sector analysis. So we actually had some pretty interesting developments here. IYT, which has been kind of this nice leader, this emerging sort of breakout sector of the market here as it took out these early 2017 highs, pulled back a little bit today. Nothing too dramatic, but something to pay attention to. Nice uptick in volume there on the past 2 out of 3 of these sell days. So that's something to note. We did kind of hammer it out today. We didn't close at the lows. We're trying to hold on to this 20 period and this prior breakout level, but certainly something to pay attention to. If the IYT continues up this loss of momentum, this downward pressure, then this could all turn into some bigger false breakout. That would not be good for the market. So pay attention to IYT, something to keep an eye on for now. It is still bullish trend, and something that I would like to see settle out, maybe get a trade in this or some of the names in the space. So something to pay attention to, but for now, notable weakness today and a notable kind of uptick in volume there over the past few days. That's notable. XLF continues to just hang out here, kind of low volume consolidation, not doing a whole lot wrong. It kind of ran right into these prior highs from March, and then it pulled back and kind of flagged out as many of these companies started reporting earnings. So keep an eye on this one above 25 or so. That's about your trigger for more upside momentum for the trend to continue. For now, we're still consolidating, waiting to see how that all shakes out. Energy, kind of similar to oil here. It's just something also to take notice, though, is we got a nice high uptick in volume today, and we also saw us take out the highs here from last week and break above this trend line here that's extended for quite a while, this channel. And again, a little subjectively drawn here. You could probably tighten that up a little bit, but just be aware, you know, we get the 8 and 20 period crossover. So there's some bullish development there going on in XLE, and I think we pointed out some of those oscillator, those divergences that we saw down here. So constructive action there in XLE. Let's see if that continues to shape up. Maybe we finally get a larger intermediate term rotation into this space that has been beaten up for so long. And then finally, biotech, also seeing a nice rally today, kind of moving back to these highs. We're still involved in this trade. If you recall, we got back in this somewhere in this consolidation over here around 310, 312, somewhere in that area. So we're still holding on to it. We haven't taken any profits, waiting to see how this all shakes out. Didn't quite close strongly. We kind of faded off the highs of the day, but I'm just willing to kind of give this a benefit of the doubt for now, trail up a stop a little bit, and we'll see where this takes us. So that's the recap for today. Again, hope you guys had a great day trading. If you're new here, do subscribe to our channel. We publish these updates several times a week. Thanks so much for watching, and talk to you again soon.